Hello friends, today we will discuss why the Bank of Canada did not change the interest rates on April 10th. I'm late on making this video as I was very busy in some personal things, but as I promised, here is this video back to you. Before I start, my friends, I want to offer you something very good. The moment we reach 2,000 subscribers on this channel, we will draw one name out of the list of liked and subscribed people, and that individual will win a Canadian $250 Costco certificate. The name will be announced on this channel. Wish you the best of luck for this win. So please like and subscribe so that your name can go into this contest. On April 10th, 2024, the Bank of Canada made a significant decision by maintaining its current interest rates, a move that surprised many economists and some investors. This decision not to adjust the interest rates begs the question, why did the Bank of Canada choose to keep rate of interests unchanged at this time? Now, according to me, there are several factors that have influenced Bank of Canada's decision. Number one is the economic stability of the country. One of the primary objectives of the Bank of Canada is to ensure economic stability. The decision to maintain interest rates suggests that the bank perceives the current economic environment as relatively stable. Adjusting interest rates can have far-reaching effects on various economic indicators such as inflation, employment, and GDP growth. And by keeping the rates steady, the bank signals confidence in the current state of economy. Number two, I can talk about inflation targeting. Now, central banks often use interest rates as a tool to manage inflation. The Bank of Canada has an inflation target of 2%, and decisions regarding interest rates are closely tied to achieving this target. Now, if inflation is running below the target, the Bank of Canada might lower the rate of interest to stimulate the economic activity. Conversely, if the inflation is above the target, the Bank of Canada might raise interest rates to cool down the economy to prevent overheating. This decision not to change the rate of interest suggests that inflation, although it is at 2.86% as of February 2024, which is still little higher than the target rate of 2 to 2.5%, it is not too far away from the target rate, so implies that no immediate action was necessary. We can also talk about global economic conditions, which play a huge role in any bank's decision to lower or not to lower the rate of interests. Now, the Bank of Canada also considers global economic conditions when making decisions about interest rates. Economic events and trends in major economies such as United States, Europe, and China can have significant implications for Canada's economy. Now, if global economic conditions are uncertain or unstable, as they are now, because we have a few wars raging across the world right now, the bank may opt to maintain the current interest rates to provide stability and support to the domestic economic growth. Friends, if you're liking this video, I request you to smash the like button so you will never miss any of my educative videos on YouTube. You can gain a huge insight on what is happening in the country and across the globe, and in North America in particular, regarding your family's finances. Number 4 point is employment and wage growth. A very important and key economic factor that the Bank of Canada considers is the state of labor market, including employment levels and wage growth. Low unemployment and robust wage growth can contribute to increased consumer spending and overall economic growth. Now, if the labor market is performing well, the bank may see no immediate need to change the interest rates. Now, this decision to keep the interest rates unchanged, as we discussed in my previous video as well on April 10th, may reflect the Bank of Canada's commitment to its existing monetary policy stance as communicated in previous statements or communications. This consistency in messaging helps businesses and consumers make informed decisions about borrowing, spending, and investing. Overall, the Bank of Canada's decision not to change the interest rates on April 10 appears to be a strategic move aimed at maintaining the economic stability and supporting continued growth. By carefully considering all these various economic indicators, global trends, and its inflation target, the bank aims to foster an environment conducive to sustainable economic expansion. However, it's essential to monitor future developments closely as economic conditions can change rapidly, potentially prompting the bank to reassess its monetary policy stance in the future. Now, the Bank of Canada has kept its key interest rates unchanged at a near 23-year high of 5% on Wednesday, April the 10th, but the Governor of Bank of Canada, Tiff Macklem, said a cut in June was possible if a recent cooling trend in inflation is sustained. Asked at a news conference whether the June rate cut was within the realm of possibilities, Macklem said yes. My personal assessment, my friends, is that the Bank of Canada may start reducing the rates as early as June the 5th. But expect those rates cuts to be much shallower, and I can predict that these interest rates are unlikely to return to pre-pandemic lows. Now, while the inflation has cooled down to 2.8% in February of 2024, the price growth slowing across goods, food, clothing and services, high rent and mortgage interest costs continue to drive up the overall inflation rate. I mean that shelter inflation is keeping the Bank of Canada not lowering its rate of interest, and I think this shelter inflation is going to be high for many years to come. I have discussed shelter inflation in a separate video in detail, my friends, and I am putting the link of that video down in the description box if you haven't watched that video. It was a very important video. Please watch it and provide me your input on what you feel about that. Now, the bank expects inflation will move closer to its 2% target this year, and it will reach in 2025, it will be much closer to its 2% target. The bank also expects solid GDP growth this year and in 2025 due to population growth and increased household spending. Now, my friends, should you have any questions about all this, whatever I have discussed in this video, feel free to call me, contact me anytime. My contact information is given down below. I will answer all your queries when you come back to me and provide you a huge insight on what is happening in Canada, North America and globally, and how it is going to affect your family's financial health. Once again, reminding you that the moment we reach 2,000 subscribers on this channel, we will pick one name and out of the likes and subscribed people and give them a Canadian dollar 250 to this lucky winner. The name will be announced on this video. Looking forward to hearing soon from you. Thanks again for watching this video. Stay blessed, stay safe, and see you very soon in the next video with another topic. Thank you.